Let's talk about the 50-year mortgage. President Trump has recently proposed this idea, and it's an interesting one. In this video, we're going to cover why President Trump is pushing for 50-year mortgages. We're going to get into some of the potential benefits and negatives that we could see with the 50-year mortgage, and we're going to talk about if this idea is really feasible. Is this something that's actually going to become common in the housing market? Before we get started, please make sure to like the video and subscribe to the YouTube. Really appreciate your support. I'm also going to put a QR code down below for a Bitcoin tip. So if you want to support the channel, feel free to leave me a little tip. Now let's get into it. The reason that Trump is pushing for 50-year mortgages is that he wants to make buying a home more accessible, and he wants to create more demand in the housing market. It's no secret that buying a home is very hard to do nowadays, especially if you're a young person. Most of my friends haven't bought a home yet because they simply can't afford it. They can't afford to take out a 30-year mortgage. They can't afford those monthly payments. So the idea here with a 50-year mortgage is let's spread out the loan over a longer period of time, and with that we'll have lower monthly payments. This may allow more people to step into this home buyer market. So I get the thinking here. I also do see some issues with the 50-year mortgage, and we're going to get into those in a moment here. But let's go ahead and take a look at a little chart which shows the median age of a first-time home buyer. As you can see, back in 1991, the median age of a first-time home buyer was 28. Even back in 2020, it was 33. Now in 2025, it is 40. So this is showing that younger people can't afford to buy homes. They don't have the income yet. They don't have the savings, and they're having to wait a longer time to step into this market. We could also look at the median age of repeat buyers. In 1991, it was 42. In 2025, it's 62. So this is showing that the younger generation is simply being priced out of the housing market. They can't afford it. And with that, I think at some point, this market may need to rebalance, right? These prices may need to come down to bring more people into this market, especially if the older generation is looking to sell their homes. Now, let's look at one more visual here, which shows the real estate sellers versus buyers. And this is in June of 2025. As we can see, there are a lot more real estate sellers than buyers, and I believe that this is still the case today in November. And with that, if we're seeing more supply hit the market and we're not seeing enough demand, this is going to lead to a real estate crash. So this may be a reason why Trump is looking to move towards this 50-year mortgage idea, right? He wants to create more real estate demand, more housing demand, so we don't see a real estate correction. And I think that makes sense. But if this chart continues to go this way, where we see more people looking to sell their homes and we're not seeing enough people stepping in to buy them, we're going to see prices come down. Another thing we've recently seen is that Fannie Mae is lowering their minimum credit score of 620 in order to take out a mortgage. Now, if you're not familiar with Fannie Mae, this is a government-sponsored enterprise that is very important in the housing market. They do a couple of things. One thing they do is they are a secondary buyer of mortgages. So when somebody takes out a mortgage from the bank, they take out a loan to buy a home, Fannie Mae comes in and they'll buy that mortgage from the bank, giving the bank more money so that they can lend out more home loans. The other thing Fannie Mae does is they bundle these mortgages that they buy into mortgage-backed securities that can be invested in by whoever. And the other thing they do is they set the standards for mortgages. So they set the credit scores that are the standard that banks follow. And if somebody has a credit score below that, they're not willing to lend to that person. So with Fannie Mae lowering their minimum credit score of 620, this is going to allow more people with bad credit to step into this home buyer market. Now, is this a good idea? I'm not sure. Maybe you don't want to be lending to these higher risk individuals who have shown in the past that they don't pay off their debts, that they're not borrowers you can trust. Sounds like kind of a bad idea to me, but the thinking here is if you lower this minimum credit score, you're allowing more people into this home buyer market, and with that, it will boost demand, which is clearly something that this administration wants. Now, let's talk about some of the benefits that we could see with the 50-year mortgage. Now, I like this idea a lot more for the borrower rather than the lender, and here's why. For one, you have lower monthly payments. Because the loan is spread out over a longer period of time, you're going to have a lower monthly payment with a 50-year mortgage rather than a 30-year mortgage. So let's say, for example, with a 30-year mortgage, you have a monthly payment of $3,000 per month. Maybe with a 50-year mortgage, your monthly payment would be around $2,500 per month. That is a $500 difference. You could take that $500 difference and invest it into something like Bitcoin. If you do that for 50 years, you could see a phenomenal return. You could also take that $500 and use it towards the things you need, whether it be food, shelter, maybe caregiving for your child, right? A lot of people, that $500 difference every month could be a big difference for them and make it a lot more affordable. Another benefit for the borrower is that the loan will devalue over time. Because the loan is over a longer period of time, 50 years, there is more risk, right? A lot can happen over 50 years. You can die. And with that, this 50-year mortgage is probably going to have a higher interest rate than a 30-year mortgage. And overall, you're going to pay more in interest over the whole term of the loan. So you're going to pay more dollars with a 50-year mortgage compared to a 30-year mortgage. But what do we know about the dollar? We know that the dollar is losing value faster and faster as the money supply continues to grow. So by the time you pay off this loan in 50 years, the whole value of the loan might be worth a lot less than it is now, right? In 40 years, a $2,500 monthly payment might be worth a Happy Meal, right? It may seem like a lot today, but in the future, as the dollar continues to lose value and everything gets priced higher, that may be actually a pretty good deal for you as a borrower. So I kind of like this idea from the borrower's perspective because as the loan gets spread out more over time, it becomes worth less and less. And this is why I hate it for the lenders. From the lender's perspective, I see a lot of risk with this 50-year mortgage idea. And the main risk I see is the risk of dollar devaluation. We know that the dollar is losing value faster and faster as the US fiscal situation continues to get worse. And I just think, what is the value of the dollar going to be in 50 years from now? By the time these lenders get their money back, is it really going to be worth anything? For one, I think that the dollar isn't even going to be around in 30 to 50 years. So as a lender, I wouldn't be very comfortable with this idea. Let's just think about it. For example, let's say that a lender lends out a loan at a fixed interest rate of 7% for 50 years, but the inflation rate ticks up to 10%, then it ticks up to 20%. Well, that lender made a bad investment, right? They are losing in real terms. They're not beating inflation with that investment. And over time, if we see inflation really take off, I could see a lot of these lenders who make these long-term loans take big losses. As the dollar inflates away and it becomes clear to people that the dollar is going to die at some point, I think we're going to see a lot less lenders willing to lend dollars over a longer period of time, like 30 or 50 years, because they're not sure what the value of those dollars are going to be by the time they get them back. They're probably going to be worth significantly less or possibly nothing. So although with this 50-year mortgage, these lenders are technically earning more dollars with the longer term, those dollars are probably going to be worth a lot less. And for that, I think that lenders are not going to like this deal, especially as we see inflation get worse. It's just going to become more clear and clear that people don't want dollars, and really lending out dollars at a fixed interest rate over a long period of time is probably not a great idea. There's also some other risks with this 50-year mortgage, right? People can die. 50 years is a long time. A lot can happen with people over 50 years. They can go through depressions, or they can go through a crisis where they lose their job. There's a good chance that as the lender, something bad is going to happen with the borrower and they may default and you may not get all your money back. If the government really gets behind this 50-year mortgage idea, I guess I could see it becoming a little bit more common in the short term. But as the dollar continues to inflate away and lose value, I think that lenders are going to become less comfortable with lending dollars at a fixed rate over the long term, because they're going to realize that the value they're going to get back from those dollars in 50 years or 30 years is going to be a lot less. So I don't really think that this 50-year mortgage idea is going to last, maybe for a little bit, but not over the long term. And I actually think that this 30-year mortgage idea is in jeopardy as well, as lenders are going to realize the risk of lending dollars over 30 years. That's going to wrap it up for this one. If you didn't like and subscribe, please make sure to do that now. Thanks for watching. I'll be back soon.